Welcome to The Explainer. Today, we're diving into a classic Singaporean ambition, making that big leap from an HDB flat to a private condo. For so long, it's been seen as the ultimate symbol of making it. But the real question is, in today's market, is it always the smartest move?
You know, for decades, this has been the sign that you've made it. It's a powerful idea, fueled by all those glossy brochures, the show flat tours, and of course, the dream of an infinity pool. It's really baked into our culture.
But let's be real. The whole financial picture has changed. We're looking at record high prices and interest rates that are creeping up. So we have to ask the tough questions. We need to really dig in and see when this so-called upgrade might actually be a downgrade.
So first up, let's tackle the big one. This long-held belief that upgrading to a condo is always, without a doubt, a step up. We're going to unpack why that's a pretty dangerous assumption to make right now.
Honestly, it's kind of a perfect storm. Private property prices have just skyrocketed, but have our incomes really kept up at the same pace? That growing gap between the dream of owning a condo and what's actually affordable, well, it makes this decision more critical than ever.
Okay, so if the risks are getting higher and the numbers are getting scarier, why do we still feel this intense pressure to upgrade? Let's break down what's really driving this decision for so many of us.
It really boils down to these four things, right? There's the promise of a great investment, the dream of that poolside lifestyle, the social status that comes with it, and of course, that powerful fear of missing out. These are all powerful emotional drivers, but as we're about to see, our feelings don't always lead to the best financial choices.
All right, now we're getting to the heart of it. Here are 5 major red flags, 5 big signs that upgrading from your HDB could actually be a serious financial mistake. Let's jump into the first one.
First up, and this is maybe the most important question you can ask yourself, this red flag is all about understanding your true motivation, your why.
So, if you're being honest, and the main reason you're doing this is to keep up with your friends, or just to signal that you're successful, you might be walking into a trap. A home is an asset, sure, but it's also a massive liability. And when you focus only on the prestige, you can quietly destroy your long-term wealth.
Okay, on to red flag number 2. And this is a big one that trips up so many people. It's all about your monthly cash flow.
This is just so important. Your monthly cash flow is often way more important than what your property is worth on paper. It's that classic trap of being house rich but cash poor. And trust me, that is a stressful place to be. A condo brings a whole new level of recurring costs that can really put a strain on your wallet.
And man, these costs stack up fast. We're not just talking about a bigger mortgage. You got condo maintenance fees that can easily be hundreds, sometimes even over $1,000 a month. Then you add on higher property tax, and suddenly that comfortable financial cushion you had is just gone. That leaves you totally exposed if interest rates go up or something happens with your job.
All right, let's look at the third warning sign. This is a trade-off that many people make without even realizing the long-term consequences.
This is such a common trap, and it's super subtle. You sell your perfectly located HDB, the one that's a stone's throw from the MRT and great amenities, to buy a brand new, shiny condo, but it's way out in a less convenient area. On paper, it seems like an upgrade, but in your daily life, maybe not so much.
So here's the bottom line. In a dense city like Singapore, a great location will almost always beat a newer building in a poor location. You could be trading away convenience and solid long-term resale value for a bit of short-term glamour.
Moving on to red flag number 4. This one is for everyone who justifies the big price tag by calling it an investment. You hear this all the time, right? Oh, don't worry, I can always just rent it out. It's a great theory, but it often falls apart when you actually crunch the numbers. With today's crazy high prices, rental yields are getting squeezed. Once you subtract maintenance, taxes, and the chance of it being empty for a few months, that investment might not look so hot after all.
And our final red flag, this one might be the most overlooked, because it's about underestimating the value of the asset you already own.
You know, selling a great HDB in a mature estate too early can be a real mistake. You might be giving up years of steady, low-risk growth. These HDBs often have incredible price stability and a huge pool of buyers. To give that up for a much more volatile and expensive private property, well, that's not always a step in the right direction.
Okay, so we've covered the 5 big red flags, but there's another major piece of the puzzle, the hidden costs.
These are the expenses that are rarely mentioned in those fancy brochures, and they can seriously eat into any potential profit.
Just think about all the costs to even make the deal happen. You've got the buyer's stamp duty, which is a huge tax, plus all the legal fees, agent fees. We're talking tens, maybe even hundreds of thousands of dollars that are just gone. They're sunk costs. Your new condo has to appreciate by that much just for you to break even before you see a single dollar of profit. That is a very high bar to clear.
So, after all this, you might be wondering, if moving to a fancier condo isn't automatically an upgrade, then what is? We really need to rethink what real financial progress looks like.
And this, right here, is the key. A true upgrade isn't about your postal code. It's about your financial resilience. It means having stable cash flow, less money-related stress, and more choices for your future. Honestly, choosing that path over a flashy address is the much more sophisticated move.
And that really is the bottom line. Pushing back against that social pressure, that reflex to upgrade just because you think you're supposed to, can put you in a much stronger financial and emotional position. The truly smart move is to analyze your own situation, not just follow the crowd. And that's the key takeaway from this explainer.